Good morning. I'm Dean Heskin, President and CEO of Swiss America, and you are tuned into our podcast, The Secret War on Cash, where we take somewhat of an in-depth look at some of the changing dynamics of our financial markets and our economy. And I do this very frequently with my co-host, Chris Agelastos. Good morning, Chris. How are you this morning?
Doing very well, thank you. Good to be back.
Well, good to have you back. And we're again coasting or cruising through our 2025 here. And let's get right into what's going on with the US dollar. So our first article, status of the US dollar as global reserve currency. The US dollar share hits 30-year low as central banks pile on other currencies and gold. Well, this is not good news. Central banks and BRICS, they've been taking a pretty firm anti-dollar position for a bit here now. And the bottom line is the US dollar is not really in any kind of position or shape where it can take a lot of detractors, if you will, or people who are looking to rid themselves of the dollar. So this is a pretty in-depth article talking about what's happening and what central banks are doing. So I guess in a nutshell, what are we looking at here?
Yeah, so I'll kind of hit the highlights. Just so everybody doesn't freak out and run to the bank today, the US dollar is still the most dominant global reserve currency. But as they point out here, we've hit our lowest share of being the reserve in 30 years since 1994. So obviously not a good thing. And especially the last 10 years, it's been consistently declining. So this isn't just like all of a sudden something happened today. This has been building momentum. We've been talking about it on here for at least the last year now, and it's certainly not slowing down. Now behind us is the euro, which is second place, and they've consistently held about a 20% share of other nations' reserve currencies. The U.S. dollar still being a little over 50%. But again, coming off highs of in the 80s, so to drop that much, definitely sends a message. Why is that happening? Well, we've really mismanaged the dollar in this country, especially the last 10 to 15 years. Now, it doesn't mean that other countries don't mismanage their currency either. It's just we used to sort of be the gold standard, right, of, no pun intended, of the currency markets. And other nations have realized that they just can't count on us to do things the way that they want us to. And so they've been stockpiling much more gold in the last 10 years. Now, prior to about 10 years ago, they were actually getting rid of gold because they were so happy with the U.S. dollar and the stability that came along with it. But again, that is no longer, and they have been loading up on gold. And we talk about articles. I'm sure if you're following this podcast, you've probably seen plenty of articles about central banks beefing up their gold reserves, and it's really surged. So there's nothing to indicate, unfortunately, that this is going to change anytime soon. Now 10 years from now, will we be in a better position? Let's hope. If the Federal Reserve, and our president makes some good decisions, maybe we can start to chip away at that a little bit, but it's not going to be a quick and easy fix.
Right. No, I totally agree. And it's, I guess let's jump into the next article here. In other dollar news, we have BRICS back in the forefront by way of India, and India likely dumping the US dollar. And what's really, I think, important to understand and look at with this particular article is India was of especially Russia and China. You have Brazil, Russia, China, India. Did I get it right? Brazil, Russia, India, China, and South Africa.
Yep.
South Africa. So that's your BRICS nations. But there are more that are in there now. But point being, your three main players, China, Russia, and India, at the end tail, probably in about the fourth quarter-ish or so of 2024, it looked like India was the one that was kind of going to be holding off getting as immersed into BRICS as some of the others. They said so much as much like where they were still going to be embracing the dollar. This is a complete reversal from what they said at the, getting towards the end of last year. And this is something that it's happening because there's a lot of anticipation of in strength that's built and has been building in the dollar in anticipation of Trump taking office. But at the end of the day, when you look at this continued building momentum of BRICS, you look at the actions of what we just covered with the central banks. These are not things that are conducive to strengthening the dollar. Quite the opposite. They're going to weaken the dollar, to put it mildly. They could be even damaging or devastating for the U.S. dollar. So, I mean, what are we to make of this? Is this something that we think is going to continue, or you think is going to continue, or is this something that is just a short-term fix, if you will, for what their current situation is?
Well, good question. Because when I read the headline, right, the first thing I'm thinking is, okay, they're in favor of using BRICS nations, currency for exchange. They're going to start dumping the dollar. But what they're actually talking about in here is that the Indian rupee has struggled against the dollar because of this recent, strengthening that you talked about, kind of the momentum that the Trump administration is bringing into the markets. And so they're concerned that their rupee is dropping too much, which obviously, as we've experienced here, that leads to inflation. And they're saying that they need to dump the dollars to be able to buy more rupee and basically prop up their own currency. So they're not saying they're dumping the dollar because they don't want to use it anymore. They're saying they have no choice but to start dumping the dollar so that they can support their own currency. So it makes me wonder, being the skeptic that I sometimes am, are they saying that to make it more politically agreeable to the U.S.? Like, we're not choosing to dump you. It's not you, it's me. Really, we love you, but we need to strengthen our currency. We have our own struggles here, and so we're going to have to be dumping some of the dollar. And what is the real underlying reason for that? They could be completely telling the truth, but again, when I hear governments and central banks, giving their reasons for things, I often wonder, how much of it is real and how much of it is just a political spin, maybe that they're, using in other negotiations or things like that. So I don't know what the real answer is here. I wish I did, but I have a feeling that it's that it's not necessarily all up front and easy for us to figure out. We're probably going to have to watch it a while and see if this continues, or if this is just sort of a short-term test of them unloading some of the dollar in favor of supporting their currency.
Right. Well, and let's not forget, that is one of the main motivations for these nations who have jumped on board this BRICS alliance is to strengthen their own currency. And, this kind of speaks to the fact that, these nations want strength in their currency, and that it makes perfect sense. And I think the concern I have is there's just, again, different options or directions that these nations can take financially with their currency, with their economy, et cetera. Dollar is still, reigns supreme out there. There's no question, but it's been dropping pretty steadily over the course of the last several years. And, a big factor that hangs in the balance, if you will, is our national debt. Our national debt is creating a lack of confidence for other nations out there, and it gives them just that much more of a reason or a motivation to be looking for alternatives to what the U.S. dollar has been offering or does offer them now. So we'll watch it. I mean, BRICS has been, certainly there's been no shortage of information and good information when it comes to BRICS, and I don't think this year is going to be much different. Will be interesting, though, because Trump has already, kind of went after them a little bit, and we'll see, in a few weeks when he takes office, what exactly does happen there. So, all right. Well, thank you for those of you tuning in. If you haven't visited us online, please do so at www.swissamerica.com if you want to learn more about this or the gold and silver market, how to protect your retirement savings. We have information on all of that. You can also contact us via phone at 1-800-289-2646. Thanks for tuning in. Chris, thanks for being here, and look forward to seeing you again next time.
Yep. Take care.